Have you ever received a check for a gift, perhaps from a grandparent or a friend of the family? In order to get the money from that check, what did you do? Most likely you had to sign your name on the back of it, or you had to sign it over to a parent so that he or she could cash it for you. Whenever you sign your name on a check written to you, you endorse it. While many people today make business purchases with debit cards or credit cards, they sometimes pay with checks too. Businesses endorse checks much like you do. There are many ways to endorse a check. In fact, there are 3 of them: blank, restrictive, and special endorsements. A blank endorsement is risky because it's based on a signature only and assumes that the person endorsing the check is the owner. Most businesses use a restrictive endorsement, which limits the way the check can be handled by depositors. Restrictive endorsements include a signature, the words "for deposit only," and the account number where the check is deposited. Most large businesses use a stamp to put a restrictive endorsement on the back of the check in the endorsement area. Some businesses may have this information printed on the check by a cash register itself. Many of these machines deduct the payment directly from the purchaser's checking account as the machine endorses the check. A restrictive endorsement is an example of an internal control used by businesses. A special endorsement is used when a person whose name is on the check wants to give it to someone else. The back of the check should have the signature of the person to whom the check was originally written and then say, "Pay to the order of." The person that the check is being turned over to would then need to endorse it and present it for payment. Banks may not always honor a special endorsement check. Here's a tip. Once your checks are endorsed and your deposit slip is filled out, double-check the information to make sure that it's correct. This attention to detail will help prevent mistakes.